Hey there, thinking about selling your rental property or business equipment? Then you've probably heard the term depreciation recapture. And if you haven't, trust me, you're going to want to stick around.
At Square Accounting, we work with real estate investors and business owners every day. And we've seen too many people blindsided by recapture taxes because no one told them what to expect.
So today, we're breaking down what depreciation recapture really is, how to calculate it, and more importantly, how to reduce or defer it with smart planning.
Okay, let's keep it simple. When you buy an asset like a building, a rental, or business equipment, you get to depreciate it over time. That means you write off a portion of its value each year to lower your taxable income. That's great, until you sell it. Because when you do, the IRS wants some of that tax benefit back. That's depreciation recapture. They don't tax the whole gain the same way. The portion of your profit that came from depreciation, that's taxed at your ordinary income rate, not the lower capital gains rate. And for real estate, it can be up to 25%. Let's walk through a simple 5-step calculation. Start with your original cost basis, what you paid, plus fees and improvements. Subtract all depreciation you've taken over the years. That gives you your adjusted basis. Subtract the adjusted basis from your sale price, after closing costs. The difference is your gain, and part of that, up to the depreciation you took, is taxed as recapture. And here's a kicker. Even if you didn't take depreciation, the IRS assumes you should have. So they'll still recapture it. Let's say you bought a rental for $500,000 and added $50,000 in improvements. You depreciated it by $150,000 over the years. Your adjusted basis is $400,000. You sell it for $650,000. Your gain is $250,000. Of that, $150,000 is depreciation. Recapture, taxed at up to 25%. The remaining $100,000 is taxed as a capital gain. And that $150K, if you weren't planning for it, it's a real gut punch at tax time. Now for the good news, you've got options. 1031. Exchange, reinvest the sale proceeds into another property and defer both capital gains and depreciation recapture. It's one of the smartest tools for real estate investors. Installment sale. Spread the gain over time, but heads up, depreciation recapture still hits in year 1. Plan before you sell. Talk to your accountant before the sale, not after. Timing matters. Every investor's situation is different, and the earlier we talk, the more options you have. Here are some questions we get all the time. Do I owe recapture even if I didn't claim depreciation? Yes, allowable depreciation counts. What if I inherit a depreciated property? Good news, you get a stepped-up basis, no recapture. Does this apply to my personal home only if you rented part of it or used it for business? How do I figure out how much depreciation I've taken? Check your prior returns, Schedule E or Form 4562, or ask your CPA to pull a depreciation schedule. Here's the thing. You've built equity, made smart investments, and used depreciation the right way. But now, it's time to sell. And if you don't have a strategy, you're giving more away than you need to. At Square Accounting, we specialize in helping real estate investors and business owners like you keep more of what you've earned. Whether it's through tax projections, 1031 exchanges, or compliance, you don't have to figure this out alone. Thanks for watching. If this helped you, give it a thumbs up, hit that subscribe button, and drop your questions in the comments. Let's make taxes less intimidating and way more profitable. Here are a few questions we get all the time. Do I pay recapture if I never took depreciation? Yes, the IRS still expects it. Does this apply to my personal home? Not unless you rented it or used part of it for business. Can I avoid it? Not entirely, but we can help you reduce or defer it. At Square Accounting, we don't just crunch numbers. We help you plan ahead, understand your options, and avoid tax traps like depreciation recapture. If you're selling a property, or even thinking about it, talk to us first. We'll run the numbers, look at your options, and help you walk away with more money in your pocket, not the IRS's. Thanks for watching. Don't forget to like, subscribe, and share this with someone who needs to hear it. And if you have questions, drop them in the comments. We're here to help. Reduce taxes legally. Real estate and business specialists. Subscribe for more tax-smart content.